Sofi and stock market investors, welcome back to the channel. My name's Jason. In today's episode, I'm going to break down why I think Sofi has the potential to make you rich and make you and your family a ton of money, guys. The earnings are coming up on the 28th next week, guys. It's going to be huge for Sofi stock. Let's get into the video. Before we get into today's video, I want to talk to you about today's sponsor of this video, and that is Moomoo. They are a great new brokerage, and like most of you, I'm new to the app. But when going through the app, I love all the features. And my favorite has to be the earnings calendar, guys. And since it's earnings season, we need to be up to date on what companies are reporting when, so we are always in the know. Investors, I'm going to show you how to access the earnings calendar in your Moomoo app. Simply fire up the app, and then we're going to scroll down to the little markets tab, right? Click on markets, and then we're going to scroll up to earnings, right? We see some earnings in focus with Coca-Cola and Netflix. So we want to click on that right-hand arrow again. Coca-Cola and Netflix, we see the revenue estimates, the EPS estimates, but the best feature in this app, in my opinion, is this earnings calendar. It gives you guys all the information you need, every single company that is reporting on specific dates. And it's organized by some of the biggest companies in the world. Like on Tuesday the 21st, Netflix is reporting earnings. Very impactful for the overall markets, right? So that's why they are on the leaderboard right there, guys. All this information that Moomoo is providing you is going to keep you up to date on what's happening and really take your trading to the next level. Also, guys, if you open up a new Moomoo brokerage today using my link in the description down below, you get some great benefits, including 8.1 APY on idle cash in your account. Moomoo is also offering free NVIDIA stock depending on your initial deposit. You deposit $100, you get $20 worth of NVIDIA. You deposit $10,000, you get $300 in free NVIDIA stock, guys. It is truly a life-changing app. I want to give a shout out to Moomoo for sponsoring today's video, guys. And if you want to check out the app, check out my link in the description down below. Sofi investors, nice bounce back day today. We're up over 5%. And that's a great reason why you should hit that like button and subscribe to the channel. I got a great video lined up for you guys today. In my big dog account, we just crossed 5,000 shares. I did add a little on that dip yesterday. And in this little baby Robinhood account, we got 420 shares. Solid day today though. So up, around 5% on the day. Now, let's get into this video on why I think Sofi still has the potential to make you rich at these levels, guys. First, I want to talk about the traffic trends for the website. Q3 2025, total traffic for the third quarter of 2025 was a record 65.6 million visits, an 8% increase from the previous quarter. We dipped down a little bit in September, right? But we're still getting over 20 million visits per quarter, guys. This is per month, actually. 20 million per month, 60 million over the quarter, right? Crazy numbers, guys. Mobile versus desktop. The mobile is obviously a lot higher at 75% of the overall traffic, right? So, traffic, usually we can parlay that into members, right? And if we take a look at the overall trajectory of the members, guys, everything is looking really good. And the more members, the more money Sofi ultimately makes, and the higher the stock price goes up over time, right? In the short term, it's a voting machine. But in the long term, it's a weighing machine. That's kind of how the stock market works. We added 846,000 new members last quarter in Q2. The numbers are just growing and growing and growing and growing and growing. I'm really proud of what Sofi has been able to accomplish with our members, guys. Really good stuff coming out of Sofi. This is a great chart with the quarterly new members, right? So we're adding around about 100,000 new ones every single quarter. And we've been up since Q4 2023, just straight up to the right, guys. Something we really love seeing here as a Sofi investor. And this is an even better chart. So here we go, quarterly average financial service revenue per member, and that is up to the right as well, over $30 per member. So if we continue to grow memberships quarter after quarter, year after year, and this number stays at even if it stabilizes around $30, right? The increase is just icing on the cake, right? So more members, direct correlation in dollars per member, right? I love that. I think it is a great kind of way for us to look at SoFi in totality and see not only are the members growing, right? Because it's not always going to be a direct correlation that members is going to be like the dollar per member is going to go up, but it is in this circumstance, right, guys? So we're consistently growing memberships and the money generated per member is going up, which is the ultimate goal at the end of the day. Now let's move on to something else that I think is a great move by SoFi. SoFi launches options level 1 to help members pursue risk-adjusted strategies. Sorry about the sawing, guys. They're like redoing an apartment right next to mine, so just bear with me, guys. Level 1 options are huge, right? The ability to sell cash secured puts and covered calls are a great tool. If you're unfamiliar with what those strategies are, a covered call is like, say I own 100 shares of SoFi, right? I could sell a covered call at a specific date and strike price, right? Say I want to sell it next week after earnings at $32, right? As long as it's below $32, I get to keep the premium of whatever it's paying me out, whether it's 40, 50 bucks or whatever. And then if it's over that, I got to sell my SoFi shares at $33. On the flip side of that, we have the cash secured put. Every option strategy is 100 shares. So say you want to buy SoFi, but you want to buy it at a little bit of a cheaper price, right? What you can do is you say you want to buy it at $25. You pick the strike price of $25 and a specific date, right? And then what you have to do is put up the $2,500 worth of collateral and you collect a premium for this option strategy. So if it goes below $25, you got to buy it at $25 at that specific strike price. If it's above $25 by that specific date, then you just get to keep the premium, guys. And you can use that premium to buy more SoFi shares. It's a great strategy, one I use all the time. And SoFi right now is not going to take fees, but eventually they're going to take fees. And man, I'm with Charles Schwab right now, and the amount of fees they collect for these option strategies, guys, is crazy. Next up, I just want to talk about the overall business model of SoFi and where I think some of these different facets of the business model can explode over the coming years that can help push this stock price way up, guys. Personal loans is always going to be a more stable business than student loans and home loans, but in this particular quarter, student loans are going to go up because this is the time of year people are taking out student loans and getting ready for the fall, whether they're going to culinary school, a traditional 4-year school, a 2-year school. And with Donald Trump's administration, they're putting limits on how much you can borrow from the federal government. So companies like SoFi are really going to benefit from those limitations, right? But man, personal loans have been incredible. Student loans have been great. And then home loans, I think, are going to explode over the next few years as interest rates go down. It's going to be a lot slower than people initially anticipated, though, right? We're probably only going to see maybe 0.5%, 0.75% over the next year decrease, right? We're not going to get down to 3.5% for a couple years if we ever even get down that low again. So just be aware of that, guys. But I do like where we're going so far with all of these different income streams. Personal loans continues to explode. Student loans, I just think this is an underutilized business model, especially because of COVID. A lot of people weren't going to schools, but now I think we're going to start getting back on that horse a little bit. And I think home loans is going to be a huge income stream for SoFi as we go forward, right? And we also have fee-based revenue, which is exploding for SoFi, right? And like I talked about before, adding those level 1 options is going to expand fee-based revenue higher and higher and higher, right? And they sell a lot of their loans to collect fees. They have so many diversified ways to collect these fees, and I'm really interested to see the trajectory of these business models as we move forward. Adjusted net revenue continues to explode as well. And then here we go. We get to see the fee-based revenue mix compared to all other adjusted net revenue, right? And it's a the fee-based revenue, as you can see, is becoming more and more and more concentrated of the overall adjusted net revenue of SoFi, guys. So this is going to continue to expand over time. And before you know it, it's going to be a 50-50 split as we move towards the future, guys. All right, this is the 30-year fixed rate mortgage average in the United States, right? We peaked at around 7%, which is a crazy number, especially when you look at the number historically over the last 20 to 25 years. So where we're at right now in October, we're at that 6.3% range. Almost 1% down from the peak between 7 and 7.1%. So I expect this to go down between probably like 5.25% to 5.5% by the end of 2026. So people that have 7% mortgages and you're looking at 5.5%, and a lot of these companies allow you to have one free refinance, right? So those numbers, that's a big difference over the 30-year life of a loan, right? Especially because if you took that loan out a year or two ago, you still have 27, 28 years left on your mortgage, right? If you took out a 30-year mortgage. So the difference between 7% and 5.5% over 28 years is tens, if not hundreds of thousands of dollars, depending on how big your mortgage ultimately is, right? So, but we're in the right direction, right? This is another reason why I think the home loan segment of SoFi is going to explode in the coming years. And if we see the charts here from some of the bigger financial institutions and their notes going on for 2025 and 2026, expect Mortgage Bank Association expects rates to potentially drop to 6.3% in 2026, boosting activity. So we're there already, guys, which is great. We take a look back at this chart, we're already in that 6.3% range, right? So these numbers are going to just continue to go down and down and down, and they're going to have to readjust their forecasts and their estimates, right? So we're already beating expectations, right? Just another of the many reasons why I love the home loan segment for SoFi stock, guys. Now let's take a look at the stock price, right? In that $28 range, the PE ratio is getting a little bloated at 57.68. But with these new numbers coming out, if the earnings are good like we expect them to be, get another triple beat, then the PE ratio is going to come down. We really want to be buying SoFi probably under a 40 PE, but we'll see what these numbers look like. Buying it in the 60s, we're getting at the wagon's getting in front of the horse a little bit, right, guys? So we just have to be careful. So selling cash secured puts is a great way to get the stock at a better price, collect some premium along the way, and then if you want to nibble off shares with the premium you're collecting, that's a great strategy that I use all the time, right? So just take that into consideration. We have a market cap of $33 billion. And another thing that I didn't even make a slide about, the S&P 500 is in the future for SoFi. It's only a matter of time. It's not if, it's just when. Will it happen in 2026? We will have to see. But if it doesn't happen in 2026, it will definitely happen in 2027, in my opinion, as long as there's not some crazy black swan event. And we can, right now, unemployment is definitely ticking up a little bit. These tariffs are definitely hindering companies' ability to hire right now, right? So higher costs doesn't allow for companies to hire, right? So that's something we have to keep an eye on. If it ticks up over 4.5% and starts to move towards 5%, we could see a recession and a small sell-off in the market, right? So just be aware of that for sure, guys. And then earnings estimates, something I always like to look at is this quarter, the current year, and next year, right? So right now, the high estimates for EPS is 34 cents for the current year and 60 cents for the following year. So that's almost a double up in earnings, which is incredible, right? So, and the low estimates are at 0.3 for this current year and next year at 0.42, right? So we still see a disparity between, the low estimate, the average estimate, and the high estimate for 2026 in regards to earnings. I think we're going to be more in that 0.55 range. That's my estimate, right? But still, if we do 34 cents this year and we do 55 cents next year, that's great growth and something I'm really looking forward to, right? And we see revenue estimates, right? Another thing I always like to look at, the number of analysts is always really important too. We got 18 covering the stock right now. And the high estimate and the average estimate and the low estimate, there's not a ton of disparity there. That's great for the stock for the current year. But for next year, we could start to see a little bit more parity, right? So 3.91 billion, 4.3 billion is the average estimate, and the high estimate 4.67 billion. But either way, sales growth at 24%. If we go from 2.61 billion in sales to 3.4 billion in sales, that's a great place to be, right, guys? Really good spot to be. If we can just continue this sale growth year after year, quarter after quarter, all these numbers, no matter how you're comparing quarter to quarter, year over year, between 24 and 32%. Great overall numbers here, guys. And I like the adjusted EBITDA. Taking a look at that, that's always good. And we're up and to the right, up and to the right. And then adjusted net income is something that's extremely important as well. From losing a ton of money back in 2021 to now making a profit and guiding for 370 million in adjusted net revenue for 2025, guys. That's where we want to be. Before we get into my earning estimates for this upcoming quarter, I want to talk to you guys about an interesting article that I found. Prediction: SoFi will be worth more than Capital One by 2030, right? 2026 is right around the corner. So the key points here: we would have to quadruple the market cap to get to Capital One's level right now. So that's pretty much, 4 years to 4x, right? So we got to double up year after year after year. And we would be right around at $28 per share. We'd be, well over, $200 a share, So that would be huge to get there by 2026, right? So can we actually get there? That is the question, right? SoFi is growing exponentially, right? So 44% revenue grew over year. And the major question this article poses is, will SoFi stock price quadruple by 2030? And it's ambitious. And I agree with that. Going from a $33 billion market cap to a 125 billion plus market cap, we have to continue to execute quarter after quarter and year after year to get to the level that Capital One is at. But I think the trajectory is there, guys, and we can continue to grow quarter after quarter and year after year. I think that's a little ambitious to get us to, a 4x, over $100 stock price by 2030. It's doable, but the execution has to be there, right? So, yeah. The Capital One market cap coming in at $138 billion, right? So that's a huge, huge jump. But I think we could get there, guys. It's going to take some time, but I definitely think it's doable. Now, let's get on to my earnings estimates for Q3 2025 and give you a stock price update as well. Real quick, guys, here are some highlights from the previous quarter. 44% year over year adjusted net revenue growth. That's a monster number, but they were going against a quarter that wasn't as good. So that number's not going to be as high this quarter because Q3 of the previous year was a big surprise. So the numbers were really, really good. So when you're comping against good numbers, you're not going to have these huge eye-popping 44% year over year growth. But adjusted EBITDA, 29%, GAAP net income, 11%. All these numbers are really fee-based revenue up 72% year over year. Financial services and tech platform revenue contributed $472 million of adjusted net revenue, up 74% year over year. Tangible book value, that's always important for banks. 1.1 billion year over year to 5.3 billion, and deposits grew 2.3 billion to nearly $30 billion, driven by member deposits, guys. Monster numbers. All right, here are my expectations for this upcoming quarter. We did 846,000 in new members last quarter. I'm going to go 950,000 new members in this quarter. And then here we go. On the right-hand side is what we did last quarter and where we're at this quarter. Adjusted net revenue, I think 955 is where I'm comfortable at. Adjusted EBITDA, 290 million compared to 249 last quarter. Net income, 130 million compared to 97 million. This is the first time we'll be over 100 million, right? So that's a great look for SoFi moving forward. The lending revenue at 480 million over 447 the previous quarter. I think financial services revenue, we're going to see a monster jump. And the tech platform, probably around the same. I'm going to go 120 million. Personal loan originations, definitely going to be up, in my opinion, 7.5 billion. Student loans, it's going to be a big quarter, like I said before. That's why we see this huge jump. Student loan originations, we could even see 2 billion here, but I'm going to go 1.75 billion. And home loan originations, with the interest rates going down, we're going to continue to see quarter after quarter monster growth, 975 million. Those are my estimates as we move for Q3 2025. So my stock price estimate by the end of this year, 2025, is $33. We're at 28 right now. I think we can hold $33. We might touch 35, but I'm gonna say we're gonna hold $33, and I'm gonna go $50 price target for the end of 2026. Obviously, depending on the macro environment and the health of the general overall economy, guys. All right, SoFi investors, thank you for staying with me through this video. And for the reasons that I laid out for you guys, I think this stock has the potential to double up in 2026 and probably in 2027, as long as we stay on this forward and upward trajectory, right? It's a little hard to estimate where we're going to be at in 2028 and 2029. That's a long way down the road, and lots of things can change with the business and the overall economy. By that time, we're going to be getting a new administration in. So there's going to be different things going on. We got to deal with different parts of the business that are going to be doing good, parts of the business that aren't going to be doing as good. But at the end of the day, I think it all balances out because they're diversified in their income streams, guys. So that's why I love SoFi stock, and it has the potential to make us all a ton of money. Thanks again, guys. Don't forget to like and subscribe. Peace.